Welcome to another episode of Your Voice Matters. Hello and welcome. Happy Sunday to everyone. Welcome to another episode of Your Voice Matter. I'm Viv Cunningham with Preferred Real Estate Brokers selling the American Dream here in Central Florida. I love living in Central Florida. I've been here since 1980, and I was telling someone, went to a funeral yesterday, and I was telling someone, this is where I'm supposed to be. God always called people to put people in the. Beverly and I are always having conversation. A lot of time we say, why God save us? But, we can't ask why God save us. God save us because of a reason. And we have to know that. And we always have to be paying it forward. We always have to be helping people. And I love what I do. I love selling real estate. I love being a part of the community. I love talking to people. And I was, before I started the show, I was talking to Beverly and Michelle, that a dear friend of mine, Miss Carol. She's always so supportive. I was in church today, and somebody walked in and they had my card in their pocket, said Miss Carol gave it to them. But what a blessing that woman is to the community. And I hope everyone goes out and support her. She's Ocheria's restaurant right off of Highway 27, right after you pass the Legend. If you're heading south, if you're heading north, it's on the left-hand side, just before you get to the Legend, after you pass Hardwood Marsh Road. She's so awesome. And again, Bridget Bennett in the community, she's such a great supportive of everything. She's an attorney down in Groveland, right off of Main Street. I was talking to Michelle. We have to support each other. Caribbean Association, Caribbean, we have our birthday party at Peter. We support Peter, and, I go support Miss Carol, because you know what? When they support me, I support them. And that's the way it is. And we have to reach out and use our people, because everyone else in different nationality, whatever it is, they are using their people. So we have to find whatever it is that we need for our people, and we have to reach out to them. And I'm so happy that I have Michelle on here this week talking about Heloc loan. It's a line of credit, on your home. And she's going to be explaining all of that to us. And I have my dear friend Beverly on here as well. She's my buyer's agent, realtor in the Central Florida area here. Beverly's my right hand when I'm not available, when I'm not here. Beverly's the one that goes out and show houses, get them in contract. I'd be out of town and I get 3 in contract, just because Beverly's here to support. And she no matter what she have doing, she'll drop it and says, Viv, I'm here for you. She'll go to Ocala, she'll go to Davenport, she'll go wherever it is. She never says no. And I thank you, Beverly, for always being there for me, because without people, our business cannot run. And that's why I try to find people that are actually benefiting community. There's so many different products out there. And if we don't come and tell you about those products, you're not going to know about those products. There's just, a lot of people have so much equity. A lot of people are not moving right now because they have so much equity inside their home, including me. I have a lot of equity inside my home. So I was very excited to hear about this program that Michelle had, and I'm going to let her start talking about it. Michelle, go ahead and introduce yourself. Let me let Beverly introduce herself first. Beverly, go ahead and introduce yourself first.
This is Beverly. As Viv said, I am her agent buyer and her right hand, as she said. I take all that. So welcome everybody to her podcast, and welcome also Michelle. Thank you.
Well, Michelle is my dear friend. We're working on some deals together right now. I'm so excited that Miss Carol, just like I said, Miss Carol, introduces. I'm so excited because I learned a lot from her. And the thing is, a lot of lenders don't usually take me behind the back scene. And what I like about Michelle, she don't tell me the buyer's business or the seller's business or anything, but she take me behind the scenes and kind of explain things to me that I need to know. So each one teach one. So she's teaching me while we're working on loans and things like that. So I'm excited to, what she's teaching me and things that, sometimes she'll ask me for something and I say, Michelle, I don't usually deal with that. But you know what? She's teaching me anyway. I need lenders. If I need insurance companies, she has a whole list of referral that she sends to me. And that's what it's supposed to be. We're supposed to be able to, send referral, receive referrals, and we're supposed to be able to use each other, lift each other up, and build each other business. So that is what I am here for, and I'm so happy to introduce my friend Michelle. Michelle, go ahead and take it away.
Well, good afternoon. Happy Sunday to everyone out there. Thank you again to my dear friend Vivian Cunningham, and it's an awesome pleasure to be once again on Your Voice Matters, this podcast. And thank you, Viv, for being consistent, and dedicated and committed, and being that voice to the community on all things that matter, especially in the area of real estate. And it's good to see you as well, Bev. Thank you for your support since Ms. Vivian has started this podcast. So again, it's another day here on Your Voice Matters, and Vivian asked me to come on board this Sunday to talk about the home equity line of credit, or as it is known for as a Heloc. So Heloc is an acronym for Home Equity Line of Credit. The equity in your home is cash in your pocket. So we have a flyer on the screen here that we can follow as we go. And this particular podcast is geared toward our homeowners. As Vivian said, there's a lot of homeowners out there that have tons of idle equity, especially that, in the last couple of years, 3 to 5 years, last few years, where the appreciation has been really aggressive. And, folks had the opportunity to refinance their homes or purchase their home for the first time and, receive that low rate of 1.992, 2.5, 2.75, threes, and even the fours. So, but right now we know the rates have pretty much doubled. Even though it's doubled, it's still a relatively low rate, but still it is a cry. Or, when you think about, oh my God, the rates were just 3 years ago, they were in the threes and the fours. What am I going to do? I have this equity I want to tap into. And usually the traditional way to tap into your equity when you're a homeowner is to do a cash out refinance, is what we call in the industry. Well, when you do that, you're refinancing your complete balance and taking a portion of that equity out, but your new rate is going to be the rate that is currently being offered. So right now, that wouldn't really make any sense if you have a 2 or 3% rate to refinance and get a portion of that cash out and get the current rates that are in the high sixes, mid sevens. So what do? So that's why the Heloc is so popular, because it allows you to tap into that equity without disturbing your first mortgage. So it is a second mortgage. It will be a second lien on your property. And yes, the rates will be your current market based rates. So again, in the sixes, sevens, or eights, or even maybe higher, but it'll just be a small portion of that equity you're tapping out and not the main bulk of your full first. So the product we have, again, on the board here, what's really traditional in the area of a Heloc is on the banking side. Home equity lines of credit is usually a bank or retail product, but a lot of the mortgage companies are offering this too, because we kind of much have gone to a screaming halt with offering the cash out refi. So mortgage lenders are coming on, and mortgage brokers are coming on board and offering this Heloc product. So it's a line of credit. And the product that I have actually is really like a hybrid. So how it works, we're going to start, let me backtrack. On the right-hand side, instead of going left to right, we're going to go right from left. I'm going to go through a few things to know if you're following the prompt here. Thank you, Viv, for putting that on the screen there. So a few things to know regarding this particular product, the home equity line of credit product. If you're just joining us, is what we're speaking of. The minimum amount that you can tap into is $15,000 or up to $400,000. And it is an 85% loan to value of your home in that price range, or in that range there. Your minimum credit score, the borrower should have 640 minimum or greater. And your property types is just not for your primary homeowners. It's also for your investors too. So you could be a primary owner of a single home, a townhome, a condominium, in a planned unit development, or it can be also your investment property with those particular types of properties. So for primary homeowners and for your investors, this home equity line of credit product is available for you. On the primary ownership side, it's 85% loan to value. On the investor side, it does drop to 70% loan to value, but you still have access to the funds. What I also wanted to share real quick, what you might know in regards to home equity loans or home equity products, rather, there is a home equity loan and a home equity line of credit. So the Heloc is a home equity line of credit, and a HEL is a home equity loan. What is the difference between a loan and a line of credit? A line of credit acts like a credit card. It lets you use or advance a portion of your approved amount, whereas a loan lets you just access the full amount of whatever you're approved for. So if you're approved for $50,000, $50,000 goes into your account and you use it accordingly, and you are charged interest, and your monthly payment is and principal is based upon that amount. On the line of credit, if you're approved for $50,000, let's say you only use $10,000, then you are charged the interest and or principal on the $10,000 drawn and not the full $50,000 line. The product, again, we're talking about today is a home equity line of credit. And this product is a blend, it's a hybrid basically of a home equity loan and a home equity line of credit. So what do you mean, Michelle? So on this one, let's say if you're approved for $100,000, you would advance $100,000. It's a full distribution of that amount. But if you only need to use 20,000 of it, you would send back 80,000 of it, so that you're only paying interest and principal on the 20,000 that you use. So it's re-amortized on that. So it's pretty much a blend. It's the best of both worlds in that regard. So let's move to the left side. So how do you get started if you're interested? If you meet these preliminary qualifications on the right-hand side, how do you get started? Well, this particular product is quick and easy. I spoke a little briefly about the home equity lines of credits. That's typically a bank retail product that takes anywhere from 30 to maybe 60 days. This particular product takes 5 days. Yes, that's correct, 5 days. 5 days from the application to the funding process, to the money in your bank account. So it's a quick and easy application process. It's 100% online application, and you are the driver. So unlike speaking to a banker or a loan officer, you drive this application process. You only speak to someone like myself or in customer service if you wish to, if you call. Otherwise, it's self-automated, self-directed. It will give you an option to pick your term, your monthly payment, and your origination fee. There's an origination fee ranging from 1.5 to 4.99%, and you get to select that. So there's a pre-approval in just 5 minutes or less. That pre-approval is done based upon a soft pull. So for those of you worried about, is it a hard pull or a soft pull? Initially, it's a soft pull, and it'll give you a pre-approval based upon the information that you supply. And that's gone over in the 5 minutes. What kind of information do you need for the soft pull? You just need your name, your address, your phone number, email address, and the address type or the property ownership type. Is it a primary or is it investor's property? And then your household income. What's also really nice about this is that you don't need all borrowers to apply. One of the borrowers can apply, but you do get the benefit of listing your household income. That information, you agree to a soft pull, and within seconds, it will do a soft credit pull that will run the credit check real quick to see what your credit score is, look at any public records, and then also after it looks at after it looks at your public records, it'll give you a decision, a pre-approval or not. So if it gives you a pre-approval, let's say Beverly, you are approved for $20,000, then it'll ask you if you want to proceed and do a hard pull. It'll do a hard pull, and then from there you are going to link your credit accounts, your bank asset accounts, your checking accounts, your saving accounts, or if you're self-employed, it'll ask you to link to H&R Block or the IRS so it can verify your income. After that is verified, then it is going to give you a hard approval if everything checks out within the line, the loan to value, your credit score, your assets are what they say they are, and it'll say, let's get started. And it will connect you with a remote online notary. So it's a digital signing. So again, you don't see anyone. The digital signing is scheduled. And one of my customers that did this in 6 days, actually took her 6 days, six straight days. So when you say 5 days, it's 5 business days. So it took her 6 consecutive days. Her funds were in her account. She met with a digital notary online, and that was done in 10 minutes for her to sign the loan documents. Once the loan documents are digitally signed, then there is a 3-day right of rescission on primary occupied property. So you have 3 days to decide if you want to change your mind. And then after that expires, then the funds are in your account and accessible. It is simply that easy. So no appraisal required because it does an automation. That's the 5th bullet down. It does what we call an ABM. And the flexible terms that you pick, which again is self-directed. You pick the term, you pick the origination fee, determine what your monthly payment is, if that's in your budget, based upon a 5, 10, 15, or a 30-year amortization. I could not believe it myself, when I saw this product and had, some of my customers go through it, and it was literally just that easy. If you wish to speak to me to get assistance along the way, you definitely can. But again, it is self-automated, and it could be in your account in 5 days without even speaking to anyone. So if you want to apply, if you are looking at this now, or if you're looking at the recorded message later or podcast later, there's a QR code right there in the bottom that says Scan Me. That will take you directly to the link where you put in the answers to the questions that I went over, like the name, the address, your email, the household income. It'll take you right there and then walk you through the whole process. Another way to apply, you can call me directly. My number is flashing there on the bottom, or it's also on the bottom of the flyer here to the right. And I can gladly take that information for you over the phone. Or you can email me your address, email address, and I can send you a direct invitation to lead. So there's a few options for you to apply should you be interested.
That is awesome. So are there any prepayment penalty? So let's say you got some money and you wanted to pay it off, pay off the line of credit. Let's say you got for example, you got $50,000 and you make payments on it, and then within about, I'm gonna use a ridiculous number, like says within 1 month. Within 1 month, I got some money and I says I'm gonna pay this $50,000 off because I did get $50,000 line of credit. I did receive. And that was deposited into my bank account. So let's say within about 30 days, all of a sudden I go and I said, well, you know what? I got some money. I'm just going to pay it off. Let's say I won a lottery.
That $1 billion lottery, right? That's
even though I don't pay the lottery. But what happened if I said, okay, well, I got a bonus or something like that, and before I even make my first month payment, okay, I got some money. Will that harm me just to pay it off, that quickly?
Great question, Viv. No, will not. There is no prepayment penalty on this product. So a good point to make here too, there is an origination fee on the product. So if you're approved for $50,000, you do not pay that prepayment you do not pay the origination fee out of pocket. It comes out of the approved amount. So if you were to pay off whatever advance, you would have, less that or plus that origination fee. So if you wanted to send back everything, you could do that. That includes the origination fee, and there's no prepayment penalty whatsoever, no matter what time frame that the loan was taken out or during the tenure of or whatever term you selected.
Now, with the origination fee, are they different origination fee depending on how much money you get?
Yes. So during that soft pull process, it'll show you, the different origination fees. And with those origination fees, how much your monthly payment would be based upon the term selected. So the term selected would be basically from the range of the 5, 10, 15, or 30 years based upon whatever your application, says. It may be sometimes a little bit different based upon your application answers, depending on your debt to income ratio and your credit score and such, but it will give you between those ranges. But the origination fee does range from 1.5 to 4.99.
Okay.
And those origination fees will be, again, based upon the individual's application. So when you're doing the soft pull, the pre-approval process, if you don't like perchance any of the origination fees or the term, you don't have to proceed. And nothing was harmed to your credit bureau report because it wasn't a hard pull.
I have a small line of credit that I'd gotten out way back when. I'd gotten it out. It's been a while since I gotten it out. Now, with having one on your home already, are you allowed to apply for another one?
So this particular product, a very good question, Viv. This particular product, because it's automated, it is, a non-traditional product. So it may be a little bit harder to get a pre-approval and or approval based upon something of that nature. I would tell you right away, it would decline it because it already sees a home equity line of credit out there. So what you would need to do first for a product such as this that is completely automated, you would have to pay off your existing line of credit first. You would have to pay that off first and then apply for this because it would see that one is already existing. And if it is denied, this product is not set up to have a set of eyes. It's not set up for manual underwriting. It is programmed for completely automated. So you would have to pay off the line of credit first. So plainly, it's ideal for homeowners that don't have any lines of credit already set up with the property. But if this is more attractive and you want, more than what you have and you want it fast, you would have to pay off the existing line of credit and then apply. So where this is very attractive is because of the quickness and the easy accessibility to the equity in your home. You're not going to be able to get funds in your account based upon the equity in your home from a financial institution in 5 days. You're not going to be able to do it. So it is a convenience factor that this product is really, really one of the positive factors.
Yeah, this sounds like a good program for someone who has a whole bunch of equity and maybe they have additional credit card bills that they want to pay off and they don't have a line of credit already on the house already. It's something good to tap into if you're looking for some extra money to even buy another property, another investment property or something like that.
Absolutely. The money that you take out can be used for anything. You're getting married, you want to take a trip to Tahiti, you want to buy an investment property. It goes on and on and on and on, but you're not going to be scrutinized on what you're using these funds for. You can literally use it for anything. If you wanted to take it out and then maybe later on apply for a traditional home equity line of credit, you could do that too if you wanted to. But this is quick and easy and accessible. And let's say you don't even need the money. You can still apply and have it. Again, as I mentioned, once you are approved, it is full distribution. So if you're approved for the $50,000, you will get $50,000 in your account. But if you don't use it, you could turn around and send it back as a payment and then have it there sitting again, for you for when you use it. And when you need to access it, you just call the customer service line and say, hey, I need $20,000, send that to me to my account. So it is linked to your bank account.
So with the traditional, do they handle it the same way as they handle the simple? Let's say, just like I said, I had a small line of credit on my house already. With the traditional, is it the same thing?
As far as what being the same thing, Viv? I'm sorry, I understand the question.
You were talking about you were talking about this loan is just for someone that doesn't have another line of credit on your house.
Yes.
So that's what I'm saying. With the traditional, could you have a line of credit on your house and still apply for the traditional?
With a bank, again, I can't
yeah.
I can't speak. I can't.
Yeah, because I think you can go to different banks and apply for a line of credit.
Absolutely. So I can't speak for all banks, but yeah, typically because you have that long process and it's basically a manual underwrite. Remember, this product is fully automated. Because and I used to be a banker, so I know a little bit about home equity line of credits. You would just you would apply and basically say I need to I want to refinance this line of credit from XYZ bank to XYZ bank. So it would be a more traditional underwriting process that would occur. So yes, I mean that would be, but it would be a longer process too.
And how long does that take?
Typically with banks, you're going to looking anywhere from 30 to 60 days with a bank. Okay. Yeah, because they're going to be doing pretty much a full-blown appraisal. They're going to want all the financials collected, given to the banker, and the banker's going to give that to their underwriting team. So it's a process. And I do know right now that because home equity line of credits are so popular, it may even be even longer because they're getting backlogged because everyone is wanting to access their equity in this form of a product because they don't want to touch the first mortgage, as I mentioned earlier, because it's in a low percentile there. So this product is quick, automated, and fast. So that's the benefit of this particular product.
Yeah, I have a question for you, Michelle.
Yes.
What about if you have some bills you want to consolidate? How would that factor out in the debt to income ratio?
Yeah, you can absolutely, again, it doesn't, because it's an automated product and it's not manually underwritten, it's going to look at the debt that you have already. Right. And take that in consideration. And then if you're approved, and of course, you can definitely use that to pay off any debt. But it's not set up where it can factor in if we pay off XYZ credit to bring your debt to income ratio down to get an approval. That it will not do. It's a hard and fast yes or no. So if it's no, it's there's no one to take a second look at it.
Okay.
If that makes sense.
And there's no questionnaire would ask you if you have some debts that you would like to consolidate.
No, if that's the case, where a debt consolidation, once everything is kind of grouped or consolidated, if you will, if that's going to help you with your debt to income ratio to get approved, then definitely this would not be the product. A traditional home equity line of credit would be the route to go, where you can have it manually underwritten and those factors taken into consideration.
Right.
But I mean, once that money is put in your account, you can use it to do anything, right?
Absolutely.
Yeah.
Absolutely.
Yeah, because if you have bills and you want to consolidate them, you just use it and pay it off.
Absolutely.
Absolutely. And the loan payment might end up being less than what you're paying in bills. You might have a loan over here you're paying for $400. You might have some credit card bills over here. That end up being, and you might say, let's say your loan payment is going to be $600 for the month. You might end up paying less for your loan payment compared to paying for all those other bills that you have that's outstanding and out there.
Absolutely. Absolutely. Great questions. Do we have any questions in the chat, Viv?
No, I didn't see any in there. I see a few people watching.
Okay.
Yeah, I see a few people watching, but no question in the chat.
But great questions, ladies. Great questions on that.
Yeah, I think this, just like you said, it's quick and easy.
Yes, and because it's quick and easy, that's why it's a hard, fast, or a hard and fast yes or a hard and fast no. So just to reiterate, if you have some things that really need to take in consideration with the eyes of an underwriter, then this would not be the product. Then, definitely go the home equity line of credit with a retail banker, with a bank.
But you can, but it's a hard, fast yes and a fast no. But you can, let's say somebody wanted to try, they can easily try, because you, just like you said, the first part of it is just a soft pull, so it's not like it's going to hurt anything big on your credit anyway, right?
Exactly.
So if you
That's
try
right.
and they said no, then it's okay.
Exactly. That's exactly right.
Yeah, it's not
So
too.
what's the debt ratio, the income to debt ratio they're looking at?
It's 40%.
40%.
40%, yes. Great question.
Mm-hmm.
And the credit score is 640.
Mm-hmm. Yeah.
But yeah, I think this would be some. I think it's quick and easy, and I like it compared to the one I've checked out months ago. I've checked out talked to banks about doing line of credit, and yeah, they were saying 45 to 60 days.
If not
Because they have
longer.
so many. Yeah, because they have so many. They're so backed up. They say. So it wasn't. That was definitely not quick and easy.
Right.
And most people are kind of staying stabilized right now, because they have so much equity inside their home, and between the builders, if they're buying down the rate, or maybe whoever is buying down the rate, it might not be far as where they are right now, because a lot of people, when the short sale came about, a lot of people refinance their house. They refinance at 1.5%, 2%, and 3%. So most people don't want to get rid of that, just like you said, so this will be something that they could easily do without jeopardizing, just like you said, their first mortgage.
Absolutely. It's something to take into consideration if you need to have access to capital, and access to capital fast. So it's nice to know that this product does exist. I'm seeing a lot of folks get out there being creative. I learned about this product on social media, tapping into equity without having any type of loan at all. I forget what the term is, but basically, the company becomes an investor in your home. So you don't pay anything. They give you a check, and they take a percentage of the equity of your home when you sell it or refinance it, or when the term expires. So there's some creative things going on out there, but I don't know if I would find that too attractive. But I like the traditional products. So home equity line of credit and home equity loans have been out there for years. As I mentioned, it was typically you see this in the bank retail environment arena, but now it's a product that a lot of mortgage companies, brokers, and lenders are offering. And it's nice to have an alternative to that cash out refinance.
Somebody said, hang on. Somebody says, great content. Also, I'm going to put this in. Let me see if, can you see that on the screen? Somebody's asking, if pre-approved, what are the chances of not being approved after the hard inquiry is done?
Great question. One good example, after the soft pull is done and we have the approval for the hard pull, a good example would be if the income is not consistent with what was disclosed initially. So let's say during the soft pull, one of the questions was the household income. Let's say you put down the household income as $100,000. Okay, once we get to the hard pull, and then we ask, more importantly, to link up your asset accounts. I think we've all seen that, where you can give your authorization to have access to your Bank of America or your Wells Fargo. If you're self-employed, it would be the IRS. So once the automation would look at your income in those particular links with those accounts, let's say it only found $70,000 and it was approved based upon your income household income being $100,000. That would be a good example of it not being approved because it was approved based upon 100,000, but once it was verified, automatically it was just 70,000. So that's an example of where it would not be approved.
And nothing try, nothing done. I mean, it's Jackie, is you can always try it and see if it works. If you might never know.
And
Just
thanks, Jackie. I think that was Jackie that asked the question. So thank you,
right,
Jackie, for your
Jackie.
question.
Right, that was a good question. So yeah, so it's you can always try and see what happens. Yeah. So, but good question. Good question. And of course, Pat says good contents. So yeah, but it is good content because I know a lot of people have equity in their home, and I like that you don't have to worry about the dealing with the lender. You just do everything online, and of course, if you need to reach out to somebody, you can. But I like that they just go ahead and put the application in, and I like that the application is on. It's only 5 minutes. And 5 minutes is not much. I was reading something on my email today where I think Florida Realtor or somebody sent me out a survey and telling me that the survey is going to take anywhere from 7 to 14 minutes or something. I said, "Are you kidding me? I deleted it." Can you imagine me sitting down for 14 minutes doing a survey? It's like, and what are you giving me to take a survey?
No, absolutely. And it literally doesn't even take 5 minutes for you to answer the questions, to do the soft pull or to link your accounts to do the hard pull. So it really is. I can't stress enough that it is really is that easy. You know how your mom said, if it's too good to be true, then it typically is. No, this is true. I've seen the product done, and it's very convenient, very convenient. And so what I find, I am a Generation Xer. For my generation, I'm right on the cusp of Generation X and the baby boomers. So I think it's fair to say that most of us in that generation, we are really hands-on with customer service. I like to talk to people. I like, walk me through it. But I find the generations after X, what is that? Millennials, that's like what Generation Y and Z and Gen Z or whatever, or what are we on now? I forgot where we on. Millennial, I think it's Gen Z. There we go. X and Y, I think are millennials, and then Gen Z is where we are now, I think, right?
I don't know anything about those. All I know is
no, I think we're on. I think we're on. Is it Genesis now? Okay. Anyway,
we're past Gen X, so yeah.
I only know about baby boomers, Michelle.
Gen Z.
I know, right. So here we are. We have represented. We're baby boomers and Gen X, right? So I think it's fair to say that we are very hands-on oriented. We like customer service. We like to call and speak to someone. Well, these other new generations, I find they like to text as opposed to picking up the phone. And they like to do everything on their own without really having to be bothered with anyone. So this is where this product is really great, because you literally talk to no one but the remote online notary when you do your digital signing. That's it, which takes about 10 minutes. So if you don't want to talk, so you have an option. If you don't want to talk to anyone, this is the product for you. If you do want to talk to someone, I am available. And then we also have a customer service line. So it kind of reaches, everyone. If you're a homeowner, you have those options of, how you want to proceed and how engaged you want to be. But definitely it is self-directed and you can do everything on your own. So Jackie asked again, is this product available nationwide or only in Florida? It is pretty much nationwide. I think there's a handful of states that it's not offered. New York being one of them. I want to say there's 3 states that we don't offer it. And I do apologize. I don't know what the other 2 states are. I know New York. I got nothing but love for my New Yorkers, but New York is a squirrely state. So this is not offered in New York, and there's another 2. But yeah, pretty much it's nationwide. So, but Jack, if you have a particular state that you want to ask about, I could definitely, let you know. And find out for you. And I don't think that would be one of the states that we're not in. But yeah, I don't want to say it because I'm not sure. I know New York is one of the 3. I think we don't have it offered right now. But yeah, but definitely it is in Florida.
What state are you located in, Jackie? If you can hear us. Yeah, but that's good stuff. Um, Beverly, you had any more
Yes,
questions?
I have a question.
Go ahead.
With the HELOC, what is your company offering these kind of loans, Michelle? Or do you know the companies that offering these?
The home equity lines of credit.
Yes. Mm-hmm.
Okay, as I mentioned, the home equity line of credit has been traditionally a bank product.
Right. We don't
Yes.
want to go to the bank now.
So now we do see, because of the higher rates, a lot of mortgage brokers and mortgage lenders have come on board to offer this product. So to answer your question, I mean, I can't say that all the mortgage industry is offering a HELOC, but many are, because I have checked with some of my peers and asking and how we could partner together. If I don't offer a product, maybe I can offer this, and vice versa. But the ones in my sphere, their companies are offering it. So, but
So, so is Movement offering this?
this is a movement mortgage product.
It's
Yeah,
a
this is
Movement product.
this
Okay.
yeah
Okay.
this is through movement mortgage
Okay.
that
I
I'm
got
done
you.
stating. Yes, yes. Yeah,
Okay.
so when
Good.
you scan that QR code, it will
Mhm.
say, movement mortgage on it. So it is a
Right.
product. This HELOC code or HELOC product is being offered through movement mortgage, and
Mm.
like products could be offered through other mortgage companies as well. But I don't know how many or who they are, if that makes sense.
Mm-hmm.
Right now, she just knows about her.
Yeah, right. I understand.
So you have another question on the screen. Jackie, answer your question. She's in Florida, but she's asking for somebody in Maryland.
I can tell you right now, yeah, Maryland is definitely one of the states that it is offered in. Mm-hmm. It is offered in Maryland, yes. So actually, it will tell you too, if you once you scan the QR code, if it's in a state that it doesn't offer, it won't let you proceed. I can say that, and I do apologize. I don't have the other two states that it's not offered in, but Maryland is it is offered in Maryland, and they just added Maryland, as one of the approved states. So as of last month, I believe so. But Maryland is good to go.
When you find out, let me know because she's on YouTube, so I'll put it in the chat. She said thank you.
Okay, sure.
I'll put it in the chat. There when you find out which state that does not do it in.
Yeah, I know New York is one of them, so we don't offer New York.
Right. So we'll update the chat, put it in the comment
Absolutely.
section so she can have, so anyone else that's asking that question, at least they'll have the answer there and they'll know.
Absolutely.
Well, good question, Jackie. Good question. And I have Michelle information on the screen again. And then this QR code is still up there where you can use your phone and scan it. And if not, then if you need it, just let me know. What I will do is I think I will scan it with my phone, and then what I'll do, I'll upload it onto the channels. It's broadcasting on LinkedIn, YouTube, and Twitter. I'll put it in there wherever I can, so they'll have access to it.
Awesome. Great questions, Jackie. Thank you for being very attentive and engaged.
Yeah. So, but yeah. So, anything else? Are you finalized? Everything is done. You talked about everything that you need to talk about on that. Any other questions or anything that you think that somebody would have out there that you didn't answer?
No, I think that's a good overview. If anyone wants to follow up, please give me a call or send me a email. I'll be glad to do a one-on-one consult if you want to dive deeper into this.
Yeah. And Michelle and I are planning a client appreciation. Come on out. We're going to be at Ocheria's restaurant. She says you're welcome.
Yay, can't wait.
Yeah, Ocheria's restaurant. We're going to be August 11th. We're there from 6 to 8, I think it is. And come on out. You can get a chance to meet Michelle. And then Michelle, you said you're going to have an attorney that's going to join us out there. So come on out. We're trying to network and get people, get to know people, and then, carry on a conversation, with face by face. Because of COVID, a lot of us have moved online with Zoom, so a lot of time we don't get to interact with people as much. So we're trying to get back out now into the community where we're actually having events and holding event into the community. So meet us at Ocheria's restaurant on August 11th. We're going to be there. And then Michelle and I are going to be starting a home buyers workshop. Once a month, we're going to be doing that so we can answer any questions. We'll have other people come on and talk, about, anything that to do with houses, whether it's inspection, in your insurance, using an attorney to do a will or something like that. Or so, we are developing our portfolio of people of I'm trying to think what the word is. Vendors, so we have somebody to call. I had somebody just text me not too long ago before I came onto the show, asked me if I know somebody that can do tiling. My husband does a lot of that stuff, but what I'm finding is, do what you say you're going to do. Be a person of your word. Don't say you're going to do something and don't do it. What happened, I think what happened to her is somebody came out and started the work and didn't come back to finish the work. I don't like that. Be a person of your word, whatever it is that you say you're going to do. It makes
Absolutely.
you're here to protect the community. And how can you just take somebody's deposit? You come and you tear their house up. You take their deposit, you tear their house up, and then you go start somebody else's house. Take another deposit over there and start somebody else's house before you're able to finish this house over here. Go ahead and finish the house. Okay, because I've went through that last year where it took so long to redo my house, and a lot of time because they had so many different jobs other places, because they took so many deposit, and you got to go over here and you got to do a little piece over here, and then after that then you got to do a little piece right here because you took their deposit. Take somebody's deposit and move through the work. You know what, you will get so much better referral. So much better referral you'll get when you do something like that, when you're just not taking somebody's money. Here she's texting me and telling me that it's been a couple of weeks now, she have not heard back from the person. Come on now. You can't do the community like that. You can't do the public like that.
Bad reputation.
Your reputation, yeah.
Some people don't foster their reputation. With
me,
reputation is a dirty word.
Yeah, and the integrity, and do good work. I was reading something and talking to somebody, over the weekend, is whether you are cleaning the toilet or you're the president of the United States. The president of the United States is not more important than the person cleaning the toilet, because that person that's cleaning the toilet, if they don't clean the toilet for the president, what the president gonna do? He's gonna use a dirty toilet. So he's just as important.
Too.
Yeah. Everyone's job is very important.
Yeah, whatever you're doing, you do a good job.
You do it for the Lord. Okay, you do it for the Lord. You might not be getting paid a lot of money compared to the president. I'm telling you, the president of the United States don't even get paid that much. Compared to
in the grand scheme of things, right? They don't.
They get $200 and something thousand, for all that headache. But I guess it's just the name and the prestige and things like that. But you'd be surprised to know somebody that's with a lower job is getting paid, a lot more than that. But I just cannot understand. Just do what you say you're going to do. But it is so important for us to be able to give referrals and send referrals, and making sure that when you send a referral, it's a good referral, because that person took care of you. If somebody did work on my house and I didn't like the way it looked, or you didn't come back, or you took a long time to come back, or you kept giving me excuses, I'm sorry, I'm not going to give you a referral. I'd rather tell somebody, listen, I don't know. My husband is one of those. I'm telling you, he's not master of any trade or anything like that, but I'm telling you, if he's doing something, and when he's doing it, he do it to the best of his ability. Okay, he takes his time with it. And I told her, I said, my husband can come over there and look at whether it's tiling. He doesn't like to tile, but he can tile. She said she had some sink or something like that she needed to get put in. He can put in sink. He can do all of that stuff. But when he does it, he works for the school board. And when he does work, he does his very best. He doesn't do a shabby job or anything like that. And
Mhm.
that's the way we all should be doing, just like with you doing lending. You should be doing your very best, because you got to remember,
Absolutely.
when you're finished with that loan and you close that loan, you shouldn't have to worry about doing any advertisement, because you know what? The buyer that came to you, or the seller that came to you with this loan or whatever it is, came to you, they're supposed to be able to send you referral, because they're going to say, Michelle took care of me. Beverly took care of me. Okay. Beverly and I had a young lady that we took out. It was a couple, and we took them out several times, and we got them on a contract so many times. And the funny thing is, we just closed on their house last week. And you know what? She says, "Oh, I miss Miss Beverly. Tell Miss Beverly I say hello," because I had to go to a meeting, so I didn't take Miss Beverly with me to go do the walkthrough. But because see, what happened is, Beverly, when she goes out with them, she makes them feel important.
Mm-hmm.
So then therefore they're going to ask about her. But that's the way we should do. Whatever we're doing, we should do it to our very
To our
best.
very best.
Absolutely. Absolutely.
And right now, I'm telling you, Michelle, 95% of my business is referrals.
Beautiful.
Because you know what? I got so much referral. The amount of referrals that I get this weekend, I'm just telling you, I must have had at least 7 referrals over the weekend.
Wow.
That's my business. I work by referrals, and I try to take care of these buyers and these sellers, and I try to take care of them. So a lot of time, they send a referral, you reach out to them, they don't reach, but of course, I have a drip campaign that I put them on, and my assistant Catherine, she goes ahead and call them. But we got to take care of these people as much as we can. I had somebody that bought a house from me, I think it was last year, and she said the AC needed fixing right away. The person at my church, because I know he's honest, I know he's going to be fair. Right away, I was able to send him that referral.
Mm-hmm. Mm-hmm.
And said, because he put my AC in, he put my daughter's AC in, and he worked at a nursing home before, but God told him, son, you need to start your own business. And I'm telling you, Michelle and Bev, his business is doing so well.
Wow.
Awesome. Awesome.
It's wonderful.
He's so busy that, but that's what I said. When you take care of somebody,
Word of mouth.
It's your business. Take care of them, and take care of them well.
Yes.
Word of mouth is the best advertisement you can get.
That's right, Bev.
Yeah.
That's it. And that's why we want to develop, and we want to support our community. We want to support our people in our community that are supporting us. And just like I said, Miss Carol supports me 100%. I talked to a young lady the other day. She came from Miss Carol's restaurant. But these are people that we reach out to and need help. And we have to help Beverly and Michelle. We have to help these people.
Yes.
Yes.
They need a lot of help, and that's why I'm glad that you're talking about this, Michelle. About this HELOC loan. Because a lot of people out there, they probably need some money to fix up their house or something like that. Because most people, just like we said, they're not moving. So if they could get a line of credit or something like that to fix their house or pay off some bill, or their kids is getting married or school or something like that.
Mm-hmm.
But I heard a little thing I'm a Dave Ramsey fan. And there was this lady that came on this week, and she was at $249,000 in debt.
Wow.
She had, and most of that debt was student loans. And she took out student loan for her children. And because they couldn't take it out, she take it out. But I'm just saying, with something like that, the money that you get, you got to steward it well. And because of a lot of these student loans, it's hard for somebody to purchase a home. But you can't go out there and take out that much student loan debt. So Dave Ramsey Teller says, listen, have your kids that finish with school, have them help you pay it back.
That's right.
Because and then again, she was in her 70s.
Oh,
let them go out there and get the loan for themselves.
Yeah, but I guess they couldn't get it, so she signed for it for them. But guys, whoever is listening to this, I know quite a few people are listening. Don't go out there and take out student loan debt. Because there's help out there. My daughter went to 6 years of college, and my sister, she's probably on here listening. And my sister, what she did every year, I filed my taxes early, and my sister helped her. And then I also have a sister-in-law. They help her, a couple of sister-in-law, and they help her, find a grant, find the money. And you know what? She did 3 years. She did 6 years worth of college and came out no student loan.
Beautiful, beautiful.
Yeah.
But it goes to, so I teach the first time home buyers class. And guys, don't forget to register for the first time home buyers class. It's every Wednesday, Thursday, and Friday first Wednesday, Thursday, and Friday of every month from 6:30 until 9 o'clock. And there's free money out there, and that will get you a certificate that's good for 2 years. Michelle right now is dealing with the Hometown Heroes program, and that's pretty popular. I think I think it might have been Michelle told me this week that $64 million out of money is already gone.
Yeah, I think it's down to half now. Is
Yeah.
what I'm hearing. It's really quickly being depleted. I don't think it's going to last through the summer, since it's now open to everyone. So yes, if you're not a home ownership, which the home equity line of credit product is for, if you want to be a homeowner, please also feel free to call me and we can see where you are. If you think you're not ready, still give me a call, because we can make a plan for you to be ready whenever that time is, and put a path or a plan in place to get you there if you want to be a homeowner.
And a lot of people don't understand. They want to buy a house, and I had somebody contact me. I didn't take the referral because I was sleeping. When I woke up the next morning, the referral was gone. But when they send the referral, they said she need to move in her house by August. I said, well, unless she get into contract this weekend, she's not going to be moving in that house by August. It takes her a while to find a house. But get started now. Don't wait.
Yes.
Don't wait, because if your credit needs cleaning up, the lender can tell you what to do, in order to get it cleaned up, because most people credit is down so low. When a lot of people come to me, and that's why Michelle and I want to start this home buyers workshop, where we can help you and we can guide you and we can give you suggestion of what to do to help bring your credit up, and so don't wait. Okay, don't wait. If you miss out on the Hometown Heroes program, there's also other, USDA loans that's out there. There's FHA. There's different, there's county program. There's city program. There's state. There's so many different program out there. Jerry Maguire would say, "Show me the money," but we can help you find that money.
There we go.
we can help find you the money, because that's why we're in this business. We're in this business to help you. And that's what we are here for, because, I remember when I got started in real estate, it was people that needed help. And when I went to other people and asked them, they said, "Oh, I don't know about that." But you know what? I made it my business to make sure I got educated and took all these classes so I can help you find the money. Because there's money out there, whether it's 1,000, whether it's 7,000, there's some kind of money out there. For you to get into a house, less, compared to renting. Right now, they're looking at first month rent, last month rent, and some are looking at deposit. So can you imagine if a house costs $2,000 to rent to 246? That $6,000 can get you into a house.
Mm-hmm.
And a lot of people don't understand that. So don't wait. Jump aboard now. Let us help you. Get your credit cleaned up, get you on the right path to home ownership. Beverly, you got anything you want to say?
No, I'm good. I'm good.
Michelle, any last thing you want to say?
No, I just want to thank everyone that's listening, and those that may be listening later. Please feel free to give me a call if you have any further questions on the home equity line of credit, or just on home ownership in general. I am glad to be of assistance.
Yes, this was a great show and great talk. And
Yes.
Michelle, I appreciate you for always. I can always call on you to come on and talk about something that our general public meet. And again, I keep singing your praise. I am just so happy that I'm just blessed to have you in my life. And you should always have a lender in your back pocket that you can always call. Not all. I've asked lenders before I started asking you. And I've asked lenders before, and then they didn't come on, but it's okay. God always work it out and put people in your path for a reason. Just like with Miss Beverly, put Beverly in my path and me in her path. God always work it out. A lot of time we get upset about things that doesn't work out. God always have a plan, and we have to know we have to put him first.
Absolutely.
That's right.
We have to put him first. But I thank you, ladies, for joining me this Sunday. And you never know when it's your last. So make sure you're having the best day of your life. Okay. Okay.
Yeah.
Thank you, Viv,
for listening. See you on the next episode of Your Voice Matters.